Happy Friday, everybody. Good morning. Thanks for joining us on this week's long-form episode of Mining Stock Daily. We have a big conversation here today. Today's conversation really is about the relationship between finance and the physical economy. My guest today is Craig Tyndall. He's written a series of essays that he's published on X and also on his Substack. He's an independent analyst and writer who's based out of Sydney. His latest work is really focused on industrial systems and capital structure and what it's going to take to really rejuvenate the physical resource economy and for production purposes. This is not a conversation on short-term forecasts or price targets. This is a real deep dive into the magnitude of the hole that we have created ourselves in the West and what it's going to take to get ourselves out of it. Special thank you to Integra Resources, Equinox Gold, Vizsla Silver, and Revival Gold for the continued support of the podcast. And let's jump into it. He's been very popular with a lot of this stuff that he's been writing about. Please welcome my guest, Mr. Craig Tyndall. All right, everybody, welcome into this week's long-form episode, and it's bound to be a good one. Over about the span of the last couple of weeks, I've gotten to do some deep reading from our guest here today. His name is Craig Tyndall. He's based in Sydney. He's a private investor, an independent analyst, and obviously now a writer, whether he likes it or not. And he's published an incredible series, a three-part series, and I think there's more coming, really about the relationship between finance and the physical economy. And this is really kind of where we stand here on Mining Stock Daily for the last 8 years, kind of dissecting the physical markets with the macroeconomies. So these articles, I will say, Craig, welcome to the show, but these articles, holy cow, put me back in my spot. I spent more time thinking and rereading them, and it felt like I was always missing something within the articles, but you published an absurdly incredible, thorough analysis of these things, of where we sit as we reglobalize the world physical markets. So first off, congratulations.
Thank you.
Second, my first question is, where the hell did this all come from, my man?
Well, it has a little bit of provenance from what you're interested in. I've been a mining investor for, I think, 38 years or something like that. It seems too long to even contemplate. And so, you know, I came up through the school of stock analysis. You know, that was certainly part of the foundation elements. But also what was the foundation elements? I was in China in 1981 as a young man doing business. I was in the Middle East in 1983. You know, I literally did hundreds of trips to China, hundreds of trips. You know, my weekly schedule would be, you know, Bangkok, KL, Beijing, back to Bangkok. Then I'd be off to Manila, and what I generally did was, I guess, anchor American companies in Asia and Australia, and represent them. And this was in the early days of software. So, you know, companies, I was in Oracle in 1987. I was in many of the companies that before they were famous, so to speak. And I spent a lot of time in a very granular sense, you know, in import terminals, trying to work out how to build a mainframe software in 1985. You know, delivering software and hardware, because in those days, you know, cloud was not even a contemplation. You know, we had to build it where it was. So we became very logistics focused in developing ideas and you know, contemplating how you delivered these systems. And, you know, I'd be in an export to import terminal one day, I'd be at a bank the next, you know, I'd be at a telecommunications company the next, I'd be, you know, I literally did the system design granularly right through almost everything you can imagine from a business perspective. And I didn't realize at the time, but I was teaching myself in a very granular sense how everything worked. I was just doing my job. But I did central bank systems in Asian countries, in Australia, and so I had to kind of contemplate what people wanted, turn them into designs with obviously a lot of help, and then implement them. And so, with that stock background, I guess hybridized with my job, traveling around the world in the very early days of traveling around the world, so to speak. I learned a lot. When I went to China the first time, it was terrifying. Just across the road, there'd be 10,000 bicycles come at you at once, and the roads were really wide. And if you didn't get across, you just had to basically stand really thin and watch the bikes go, forward and past you and all that kind of stuff. I remember getting stuck across the road, crossing a road in Beijing, and I had no idea how to get across the road in time because I literally had to sprint, and everybody else did in those days too. It was in the early days. It's like, you would see another Westerner on the other side of the road, and you'd cross the road to say hello and find out what they were doing, because you'd hardly ever see them. You'd be way out in some Chinese province, and and funny stories.
All right.
Stopping by the side of the road to go to the bathroom and sit, and trying to sit down, and another Westerner coming and sat beside me. It was funny days, and so I guess what I got was an appreciation of how the world worked, by accident, and that's what I guess is the genesis of these essays. They almost kind of channel through me from that experience, and I kind of came out of my box about a month ago. I used to write, if you go way back, I've got articles in the Australian 15 years ago and 25 years ago and things like that. And I kind of gave it up because I was focused on I guess originally bringing kids up, and I got 7 kids, and then it was just wealth creation.
Yeah.
And
I've only got 2 kids, so I know exactly what it's like to be extremely busy, not being able to do the things
Well, yeah, you get focused. You got to do the things you got to do, and
absolutely,
and especially when they're young, and now they're all adults, and I've got a beautiful place. I've got a big forest in Sydney. I've probably got the largest forest in the Sydney metropolitan area, and we live. I plant trees and do things that people my age generally do. But I guess it came out of a sense of frustration that I'm kind of that cartoon where the grandpa's shaking his fists at the clouds and yelling at the clouds. What? And it was like, they don't get it, do they? So I thought I'd put pen to paper, so to speak, or laptop to, and start talking. And
well, you've returned with a bang. I mean, if this is a return with a brand new curtain call, I mean, nobody has done it better. I'll be quite honest with you. I mean, your assays have been effective. They've reached the upper echelon of government power here in the United States, going all the way up to DC, I hear. But your series of essays here, they explore heavy industry, mining, processing capacity, and how they don't behave like typical financial assets, which we have just been accustomed and been inundated with news for the last part of the, I would say, couple decades here. But you explain why shutdowns are often irreversible within the processing realm, why costs of capital have become a strategic variable, and why markets have been completely slow to recognize the constraints that they've built up on their own through this globalized system. And so you've kind of described your background But can you kind of talk about the ethos, the genesis of, what you did in a prior life in your career to where, you're that, the man on the ground shaking at the clouds, talking and thinking about natural resource development and processing?
Well, I guess uh, the other part of me is I've been a lifelong studier of economic theory. I'm the economic wonk that could quote papers from Ben Bernanke's university days, and I've literally read them all at some point. I've read von Mises and Hayek and Bernanke, and I can show the pivots between each one of them, and I can kind of translate to how they affect the world, and why they were contemplated, and what was their genesis. Where did they come from? Why did they think that way? Why did Marx and Engels think the way they did at the time? I've always been super curious about that. And so my diagnosis is quite different than probably others you'll hear, in that I think the prevailing economic neoclassical theory that I guess emerged in the 90s, and some people call it economic rationalism. This idea that price discovery is the most efficient means of managing your economy was lunacy. Because it's stateless. This idea that the best way to produce things is find the cheapest place you can possibly produce it, obviously has a net outcome over time, a long tail, that you don't produce things anymore because you're arbitraging wages. Really, you're not even doing anything smart. You're not creating more productivity overseas. You're literally putting people in Foxconn factories with nets around them, so that they work for $3 a day, and have miserable lives. It's almost like slavery. But we gave away the boats and put nets around their buildings instead. It's we've found a way to extrapolate ourselves, if that's the word, from where the production happens, and it has consequences not just for the people in China, or the people that are producing the things, but it has consequences for us too, because that efficiency, that statelessness in the economic theory, and people hate me for saying this, but people like Milton Friedman and things like that were talking about giving away sovereignty. When they talk about price efficiency, they were talking about being efficient so that we didn't produce things in Australia or the United States, that they were produced overseas, and that's happened in history before. It's not. This is not something that's new. In the 16th century, the Spanish, coming back from the Americas, brought all the gold and silver back, and they were rich as hell. And they got lazy and didn't do anything. And eventually all their gold and silver couldn't be used for anything because they didn't produce anything. So they lost their power. They lost their consequence. They became a financialized economy instead of a production economy. They disconnected their financial economy from their material economy. And Spain eventually used all their gold and collapsed, but did it over 5 or 6 spectacular epochs or eras. And the Dutch, who got very good at creating manufacturing things, kind of ate their lunch. The Western governments, 16th century Spain, we've got to the point where, I know it's very kind of trendy to talk about sound money and all that kind of stuff, and I believe in it. I hold gold and silver and Bitcoin and all those things, but it's not the whole story. The you can have as much gold and silver as you want, but if you can't buy anything with it, which is what happened in Spain, it's almost pointless, because your financial economy disconnects from your material economy.
Yeah.
And so, you know, it's happened. If we go back to American history, Alexander Hamilton. I am a big fan of Alexander Hamilton. I've read all the founding fathers very, very deeply. I don't think there's anything I haven't read of them. The Federalist Papers and the various, his essay on manufacturing in 1791 and all that kind of stuff. These people were brought up or emerged from great tribulation and difficulties, and they learnt a wisdom that is ageless, and that is that something that's very popular in the United States is freedom and liberty, but what people have disconnected from is there's conditions precedent to preserve your freedom of liberty. You can be a libertarian, but if you can't produce things, if you're, I think he said it, if you're beholden to foreign powers, your freedom and liberty is beholden to those foreign powers. It doesn't exist in a state that it exists in a state that you create. It doesn't exist by itself as a principle, and that's super important. Hamilton had very, very deep ideas on central banking, and in one of the papers I espouse those ideas on central banking is that you've got to be able to run an economy that provides for your citizens, your food, your minerals, your critical minerals, etc., like that. And if you don't do that, what happens is the financialized economy gets too strong, it overtakes everything, and you get this bias. And inside the Fed's, management of the economy is biases that are bizarre. Like the neoclassical equations. I don't know if you've done much calculus, right? But they
It's been a while.
they use it like Latin to protect against investigation. It's used as a way of making their stuff opaque. And when you actually get into the calculus and you go, okay, what does it really mean? What is it saying to me? Because ultimately, whether it's Latin or whether it's calculus, it has to mean something at the other end. Yeah, they're saying really bizarre. They're providing really bizarre assumptions that underpin the economy. They're saying price only matters. It doesn't matter if it's stateless. What a silly thing to think. And if you go right into that calculus, you can tear it apart. But because not many people understand the calculus, nobody knows where to go. Nobody understands actually what it does. So it becomes Bernanke has got a famous paper called the black box, and it literally is a black box. They've built this black box that you can't see into. And so when you look at the cost of capital, it is favored. Let's take it, for instance, how they measure inflation. If your bread and milk goes up, they say that's something that you have to put your interest rates up for, because we don't want people's bread and milk going up. Fair enough. But if you put your interest rates up because your bread and milk go up, all your industrial projects fail. That you've got to, but in their pricing methodology, they go, well, it doesn't matter if they fail because we're not going to notice, because it all went to China and the price of bread and milk and TV sets went down. So what you've got is a fundamentally flawed way of running a country or running the West. We're all there's 14 central banks and they're all doing the same damn thing. They all follow the Fed. And so they're all I guess, penalizing the cost of capital for industrial projects. The weighted average cost of capital for a mining project is, effectively is about 14 to 18 to 20%, depending on what the project is. You've got a risk premium, you've got ESG, you've got, you've got the actual cost of capital is much higher. The bond rate, for instance, in Japan's 2 to 4% right through Asia, and the bond rate in the West has been much higher. So we're asking for a run rate from Western mining projects and industrial projects of 14-15%, and the Chinese state capital is providing that at 2% for overseas projects too. 2 to 4%. They haven't got a risk premium because they're self-financing. And so if you've got a mining project financed by the Chinese, you get 10%, you make an 8% profit. If it's a Western project, you're losing 10% or more, because you've got to go through all these ESG hoops and all those kind of things. From the Chinese perspective, they don't have to do that type of thing.
Right.
And so it's been gamed. This, there's a famous paper that Bernanke wrote in 1999 when he was with Gerber, and he was in Princeton, right? And I imagine them sitting in an office, writing this paper, and he suggests that there's no economic penalty for raising the cost of assets, and what they call it through is the debt monetary channel. So what they do is they channel money through debt to the asset channel. So it's the real estate asset channel, it's the stock asset channel, and things like that. So things go up, and what they hypothesize in those days, because they hadn't done it, is that because the asset goes up in price, we all feel richer, so we start withdrawing equity and spending our money, and that's what causes consumption. What a perverse idea.
It's a hyper-financialization.
It's financialization on financialization. It's what's that saying? It's turtles all the way up and down. So it's crazy. Like, I remember reading it in 1999, and I remember walking around in circles going, "This is stupid." But we all got carried away. It was the end of history in those days. That concept of, there's not going to be any wars. The US is dominant. It'll never be not dominant. End of history. We don't have to worry about that stuff. Let's get the WTO and let's spread the whole thing around, and everyone become democratic because we're great people, and we're going to be really generous and let everybody in the door. What a nonsense. Like, if you study history, when has that ever happened? Right? That if you actually study history, that's happened again and again, that we've been that dumb to do that.
Hey, we're just going to take a real short break to let you know that this long-form episode of Mining Stock Daily is brought to you by TerraHutton. In mining, the difference between a good project and a great investment often comes down to one thing, and that's visibility. TerraHutton is a Sweden-based online mining investor platform built to make the invisible investable. TerraHutton brings mining projects into the digital spotlight, combining data, narrative, and context in one place, so investors can see not just what a project is, but why it matters. Explore projects, see the story behind the data. Visit TerraHutton online and start discovering the stories behind the data. And now, back to our episode. Craig, you've done a great job there, about discussing, as we said, the hyper-financialization of developed economies. And I think it has become noticed on a lot of these powers, the governments, that they're finally coming to the realization of decades of negligence of industrial capacity. But it seems like they're really quickly, whether their hands are being forced or because they know that's the direction needs to go on the back of the theme of a deglobalized world, that the solution is, well, send money to it, push money to it. And you've talked about these warnings that liquidity in these essays, that money is treated as it can always summon production. But the world is, as you mentioned, your words and your writing, we're working on two different ledgers, a financial one and material one, and those no longer reconcile each other. So throwing money at the problem isn't going to provide a long-term solution. So what signals does this material ledger send that markets are currently ignoring?
Well, the material ledger, if you can imagine the supply lines, I call them the allies, and the supply lines of the allies have been, I guess, put through China. So what happened I'll go back to it and tell you a story, and it'll relate back.
Okay.
In 1914, Metal Gazelneck is a German company, and it provided metals to the world. It had a company in Australia called Australian Metals, ironically, and it mined zinc in Tasmania and Broken Hill, where BHP come from. And it also had an American metals company, and it also had some European metals companies. And what they did is, in those days, they didn't call it offtake agreements. They established these companies and took the offtakes and channeled all the metals back to Germany to refine them. Okay, so they controlled the world of metals in those days. This is kind of the analogy that is happening now. And then in 1914, the world went to war, and Germany invaded Europe, and that happened. And all of a sudden, the world realized that it didn't have any metals to defend itself. So at the Battle of Orgeuse in France, you can imagine, there were Australians there were Americans there were British there. The Germans overran the French, because the French ran out of artillery because they couldn't make shells.
Yeah.
Right. And so, they were left kind of without the ability to defend themselves, because they'd done the same thing that we're talking about. They'd let a foreign power control their ability to defend themselves. In 1915, there was a massive scandal in Westminster, and Lloyd George, who was a future British Prime Minister, he was made Minister of Munitions, and he had to reorganize the entire world to make sure that they could get the alloys, they could get the copper, they could get the zinc, in order to defend themselves. And that's, I guess, analogous to what we're talking about today. What's happened is that China's done exactly the same thing. So if you look at every critical metal, and there aren't any, one of the things that people go is, well, we'll just substitute some metals for others. They've included all the substitutable metals as well. All the critical metals are either 50 to 98% refined, smelted in China. They've built all the smelters. They've price warred all of our Western refiners and smelters to the point that they couldn't make any money, so they all went bankrupt. There was a bankrupt last week, US Magnesium. And magnesium is used for titanium, and if you don't have it, this goes for all metals, including chemicals, because chemicals is a whole new story. I've written an essay on that, I haven't really released yet. And so, let's take an example. Silver, 8 tons of silver is used inside one of these new AI data centers. 65 tons of copper. All right, we're building 20 of them, so that's big tonnage, hundreds of tons. The 70% of silver production comes out of China via copper, zinc, and lead smelting. The silver slag is then shipped to the ingot makers in Switzerland and Mexico. I think there's 25 to 50 grams of silver in every missile, and you can't reuse that. You're not going to recycle it because it gets blown up. There's anatomy, there's all of these rare earths, and they're all in the same boat. Scandium, right? They're all refined in China. And so China's put a 2-stage licensing mechanism across the entire lot. So if you want to get the silver slag out of China, you have to be a licensed customer and they've got to approve what you're going to use it for. And they've just done this last week with Japan. They're not shipping any rare earths to Japan for military use. So we can't get the end product. If you could imagine a refine, we've satisfied ourselves for decades and decades that if the copper's in the ground, it's ours. It's not. It's only ours once we get it through the smelter. So I'll give you some examples in Australia that I know reasonably well. There's a tin smelter, and tin's pretty important because it's basically the lifeblood of all these data centers. It goes into every solder.
Yeah.
From chips to PV to just about everything you can think of. The great move to electrify the world is goes through tin. There's a tin mine in Tasmania called Renison. Now, Renison is half owned by Metals X and half owned by a company called Yannon. Yannon is Chinese, so it's a 50-50 split. The offtake agreement for that Renison mine goes straight to Chinese smelter, right? So they've contractually secured it. So in Australian thoughts, we have a great tin mine in Tasmania. In reality, we have a tin offtake agreement, and they've secured the tin that comes from Tasmania for Chinese use. Now, we can't get that tin back unless they approve the projects that it's being used for, or the purposes it's being used for, whether it be data centers, or they could just guillotine the whole lot and just say, we're not going to give you any metals. By the way, we're invading Taiwan. Good luck defending yourself, right? And I hate to be a doomsayer, but people, this threatens the security of you and me and everybody in the West, because while that opportunity exists, there exists incentives for them to use it. Like that opportunity, obviously the Department of War and Department of Defense, or whatever they call it now, Department of Energy, are creating initiatives to get themselves out from under this. But while that happens, because ESG and all the other approval processes and the various things that has to go into building smelters and building refining in the West, takes time, takes 3, 4, 5 years to do it. Even if we accelerate it, there's going to be a physics, there's going to be a physics to how fast they can start it, whether we like it or not. And so while we're in a very difficult position until that kind of stuff turns around.
Well, so there's obvious pathways, industrial systems. But if we're going to stick with kind of the mining and metals pathway, from upstream to downstream, it's path dependent, right? If we're just going to talk about mining and rocks and ore bodies here, sure. Mining, concentrate, processing through the supply chain to the end user, the manufacturer. And that's obviously overly simplified to what I just said. But it is path dependent, and it is irreversible once they are shut down. And that's exactly what we have done over the last 30 years, if not, shorter time frame than that. So what is your thoughts on the irreversibility that we are faced with? Is it completely irreversible? Or if it cannot be brought back and managed in meaningful time, is that absent in economic models and policy modeling?
Totally absent in economic models, right? So if you look at the Euler equation that goes into the economic model that the Fed is based on, if a aluminium smelter goes down, the equation says that they could just bring it up like magic, right? That's how our economy is kind of, that's the kind of software design of our economy, is that we're making these assumptions. And for instance, there was an aluminium smelter in New York that has had 3 fires. There was, I think, another chemical I think I've counted 25 different fires or industrial accidents in the last 2 years. Okay,
Wow.
and I don't bring any conspiracy to that. I just think we're really bad at it. And so and these things are, by nature, difficult. And so you do need a level of redundancy in order to provide this stuff. And we've never worried about it because our economic model says if we've got the money, we can do it. Now, what I'd point to also is that, I don't know if you know, BHP has to sell iron ore now to China and CNY, and they're using their currency. FMG in 2016 started that, and BHP was a holdout. Right now, with 50 to 98% of the rare earths and various critical metals coming from China, what if they said, "Hey, we want you to use our currency from now on to buy things." There could be people talk about BRICS and all this kind of stuff, and they really haven't thought about the mechanism of doing this. And what I'm saying to you, here is the mechanism, that you disconnect the USD from the euro dollar and all that kind of stuff. You basically say, well, we're not going to provide you the things that you need to run your Western economies unless you use our currency. And that has real financial consequences, and that's what I pinpoint as the disconnection. Is all of a sudden, from a historical perspective, this has happened before. The money we've got, the money we use, the money we think, I always hear this saying, we've got the deepest capital markets in the world, right? And everyone goes, oh yeah, we have got the deepest capital markets in the world. Well, hell no, you don't, because it's not connected to materials. Right? This is we say these things without examining them. Is that if our money isn't connected to materials, and we can't buy those materials, well, it doesn't matter if we've got the deepest capital markets in the world. We may have a functioning reserve currency system, and this goes for the euro and the JPY as well. But we may have to use somebody else's currency to get what we need. And then all of a sudden, your reserve currency is in a crisis, and that's the mechanism by which it happens. It may not happen exactly that way, but I look at the BHP example where the BHP held out for years, for almost a decade, from accepting Chinese currency for iron ore, and then the Chinese said, "Well, sorry, we're just not going to buy anymore," and they said, and BHP came back to the table a month later and said, "Yeah, okay, we'll take it." Now, what happens if that happens at scale?
Yeah, no. So that's the hard bifurcation that I believe you termed yourself in the writings, where financial systems remain liquid, but physical markets are on the verge, if not already, insolvent.
Yeah.
And, as an American, I just don't see any private company or even approval with the United States government that it'd almost be traitorous to be doing a deal in somebody else's currency while, we have the global currency in the US dollar. I mean, that would be an absolute shock to the system. It would make
and
it
it's coming. It's coming. You're getting set up for the kill shot. And this is why I came out of my box, right? And said, I can't put up with this any longer. I've got to start communicating with people, because I don't know if I'm the only one that sees it. But as it turns out, it probably is. But the whole thing, the big picture is existential. It's for us too. It's like, it's not just America. It's Australia. It's all the Western countries.
So what
we've got to get moving.
Right, but you're talking about a hard structural change of the physical markets on a global scale. Like, everything would change from day one. And it's like, then is that when physical resources become fully priced?
Well, priced in what? Priced in what? Priced in what? Like everyone says, well, silver's going to go to the moon. That example I was using, and where they got to
Right.
control 70% of the silver market. We're in deficit the last 4 years of 25,000 tons of silver. Okay. So when you're in deficit, you're pulling it out of vaults, basically. Right. Now that deficit, I think it's 4,800 tons this year. Now, if the Chinese cut off our silver, because that deficit included the Chinese production, if the Chinese cut off the silver production and like they're threatening to, that deficit jumps out to like 12,000 tons or something per annum. How quickly are the vaults going to empty? We can all be self-satisfied. I got a heap of silver and say, well, geez, my silver's $250 a ton. Sorry, $250 an ounce. But that's satisfaction. It's not going to last very long if the whole economy is going down. The same goes, I was on a Bitcoin conversation on the podcast yesterday or the day before, and the same goes for Bitcoin. The same goes for gold. If you can't obtain the things you need to obtain to live your life, and I mean this both personally and as a community, how what are you going to do? And so we're going to start ringing fire alarms and going down the where the fire guys do go down the pole. And we're all going to start doing something about it, because if we keep sitting here in our little dream, in our delusionary state, it's going to come and rattle our cages in a big way. And it's going to come and rattle our cages for our children. It's going to come and rattle our cages. In some cases, when I was a kid, my grandfather used to grow food out the back, and I used to sit there and help him. I thought it was wonderful. I still grow my own food. I've still got my own and all that kind of stuff. How are we going to do that? We're not reliant like we were 2 or 3 generations, or resilient like we were two or three generations ago. For instance, these big data center ideas, right? They rely on transformers that come from Siemens and Hitachi. Siemens has got a backlog of 138 billion euros, according to their last filing, of transformers. Right, it's 5 years. So, like, if you're going to build one of these fancy data centers, you've got to get a transformer. It's going to take you 5 years to get it. Now, guess what? Where does Siemens get their rare earths to build these transformers? China. And guess what? They want some transformers too, right? So you can imagine a conversation. And I'm not accusing Siemens or anything here, because I know they're trying to do a lot about changing this, because you can see it in their filings. But you can imagine Siemens being put in a conversation which says, well, we'd like to go to the front of the queue. If you can bring us to the front of the queue, we can give you some more rare earths. And so that kind of situation is, demonstratively very serious. It's happening it's happening right across the substitutions. Like, you need 65 tons of copper to build one of these fancy data centers. But substitution, aluminium. You've got to get the aluminium from China as well. So they've covered all the places that you can possibly go as a curative measure. And so we've got it. It's not over. We have got a way of fighting, but we're losing that window. We're losing that window to make major changes, to fight. We're still worried about gender and all kinds of weird stuff, when our very existence is under threat.
So this is a good segue to my next question. Obviously, the physical markets, raw materials are constrained. But why do you think markets are so slow to respond to them? Is it a time horizon issue? Is it a modeling problem? I mean, is it just the way finance has evolved and worked over the last 20 years?
It's conditioning. All right. So, I'm sure that there's a lot of people who are situationally aware of it. Let's go back to Fortescue, the FMG, right? Shipping 80% of their iron ore goes to China, right? They wouldn't have it anywhere. It's all very the new mine. I forget what it's called. Starts with an S. That Rio Tinto started with. They're at stage 3 and 4. So I forget what it's called. Their iron ore's plus 60% quality. FMG's iron ore's, I think, in the mid 50s. So they've got a higher grade, and it's Chinese financed, even though it's Rio Tinto operated. China comes back to them at some stage and says to them, well, we want the iron ore at X price. We're not going to pay that price anymore because we've got a better provider that's got a high quality iron ore. Thanks very much, but lithium, Pilbara Metals, great example. 85%, I think, and people can check me on this. 85% of their offtake agreement goes to Ganfeng. Ganfeng obviously is a Chinese company. They have control of Pilbara Metals lithium, and it's not Pilbara Metals' fault, and it's not Twiggy's fault. It's not because of the cost of capital, we've forced them into this position. This is not something that they would choose for themselves. We've got a WACC that's so high. If somebody offers them some mining equipment or metals or whatever, finance at a much lower rate, they're businessmen. I don't believe they can't see this coming, at least for their sectors. And so they're just trying to stay alive as well as they can in the environment we can. And that's why we need reform, so that we can, re-engineer ourselves so we're more resilient and self-founded, so to speak.
So how should we look at capital structure? If we have this hard bifurcation, is capital structure itself is strategically geopolitical? I mean, should it be weaponized so we don't become insolvent?
Yeah, it goes back to this Hamiltonian, Alexander Hamilton's idea of a monetary system, and it also goes back to Eisenhower, and in Australia, Robert Menzies. This is not Eisenhower talked about the same thing. If you read all his papers, everyone reads his last speech as the military-industrial complex. And nobody reads the rest of the speech. Right? It's right. Like we take that take, and that was his whole speech. His whole speech basically said that we have to be self-sufficient. He ran World War II, and he wasn't a general that said, listen, let's charge over there. He was a general. He was a logistics general that made sure that his fighting generals had the materials and the political support and the finance that they needed. And so he knew it because, he grew up in rivalry. Alexander Hamilton knew it because he had to go through Valley Forge. He was right beside Washington when 90% of the troops were killed when the British ran through Connecticut. And so, Robert Menzies is, shout out to the Australians, is Robert Menzies knew this because he was our World War II Prime Minister. These people understood everything. And if you go back to any of these economic theories, you know, whether it be Austrian economics or neoclassical, they were all developed in dominant periods where they were on the empire side, whatever that empire happened to be. So they're all about market efficiency. You know, they weren't about survival. And so we've gained a kind of fettered idea of what these economic systems do to us. You know, the Austrians would say to me, you know, well, it's just about sound money. It's, you know, we just have to have the gold standard, and we have to, you know, be careful of what we have to spend, and we have to balance the budgets. Well, that's all true. I'm a bit of an Austrian economist myself, but it's not. It's not true in the sense of that's not the foundation. The foundation's a level below that, and that is to be able to supply the things you need for your country to survive, for sovereignty to survive.
I've been reading Road to Serfdom by Hayek, and so there's so many ideas cranking through my head, and I'm unable to actually put a question together, but I know there's something in there, you know, on the classical sense of what liberalism is and what Hayek was writing. And I think something that I'm kind of working with right now, again, this is probably not going to come out as a very effective question, but we've talked about, you know, arming capital to bring industrial policy back into the forefront in an efficient manner. We're talking capital controls when we do that, but capital controls is also something Hayek, I believe, would have been against, because it goes against the classical term of liberalism and capitalism and its most efficient part. So again, like I said, no question in there, but you can begin looking at all these theories and how they work together in tandem, but also can kind of be forces of difference at the same time.
Here's an ironic thought to swirl around your head. Hamilton, I think, was the inventor. He was before von Mises and Hayek and all that.
Right.
Hamilton, I think, was the inventor of state capitalism, right?
Mm-hmm.
Xi Jinping is a follower of state capitalism, except his version of state capitalism, you know, has control of all the people and doesn't have any of the freedom issues as well. Hamilton preserved freedom and liberty and all those kind of things. What is the only practical solution, right? Is you know, certainly using Hayek's ideas within a country, absolutely. You know, it works. Working with a solid allied framework like Australia and America are good allies, that works too. But working outside with your rivals is just absolute lunacy. And I think if we brought him back in a time machine, he'd tell you that too. It just, because he was a very, you know, the Road to Serfdom is a brilliant book. He was a very practical man. Like it wasn't espousing theories without a lot of thought. Right. And you know, it's just common sense. If you're gonna you know, and we've described it, if you're gonna put all your key supply lines through your rival's country, you're just asking for trouble. Eisenhower wouldn't have done it. I don't think Hayek would have done it either, because it defies common sense. Right. And that's the answer is yes, you need, you know, it brings us, you know, back to all these other crazy theories, MMT and all that kind of stuff, is you can't do this without balancing your budgets. People, you know, the MMTers think that if you spend money, you know, $10 in debt, it'll create money, and so, you know, the deficit spend is justified because you get a multiple. That's kind of MMT in a very simplistic way, right? Well, you can't do that if yeah, you can do that in a stateless system by all means. You can, you know, if you're getting your iPhones from Foxconn in China, you know, that'll work for a while. But you can't do it if you're in a stateful system. You've got to balance your budget. It's the math just doesn't work any other way. The only reason the MMT math works is because they're assuming that everyone's going to give you stuff cheap. And the reality is that's a big lie anyway, because all we're doing is getting people to work for $3 a day or whatever it is. And
Yeah.
it's not productivity. It's just slavery without boats.
You, you you may have just answered my last question, and I know we're coming up uh, end of our time here, Craig. But I did want to ask you. I don't want to leave this like doom and gloom, and everybody puts their head down and goes for the walk, or maybe they're already walking while they're listening. But if decision makers like genuinely wanted to reverse this trend that you've done an excellent job of writing about and laying out the framework and making changes, not rhetorically, but materially, what structural change would matter the most to you? But just as important, what changes do you think won't meaningfully alter any outcome?
Well, what's coming in future essays is a reform proposal for the Federal Reserve, right? Which is not about gold and all the other things. It's actually to say none of your formulas work. Here are some formulas that do work. I've done the calculus, and this is how to prioritize, sovereignty for the United States and Australia and all the Western countries. So that's coming. And it's mostly written. It's just you start to swim in your head when you're writing these complicated things. The other bit is a practical plan. There's about 40 pages written on what to do, and it's just really practical. You could get on a whiteboard and we could do it ourselves. What is important for us to produce in the country, right? Cars, yeah, like apples. Well, maybe not so. A percentage of apples, yes. You could go through and just go, okay, what are the things that we need to produce in the country? And we can do that, more critically, urgently, and I take my hat off to the DoD guys that have already seen this, that are already financing some of the big exercises in, reestablishing smelters, reestablishing refining, reestablishing onshore capabilities. IPX, Hyperion X. I don't know if you come across that. Big shout out to those guys. I know them well. They're going to do titanium out of Virginia. And guess what? They're using US technology to do it. Right? Never, the innovation. We lauded innovators that took our attention. There's people that in real industrial inventors that couldn't get any money because of the previously mentioned capital issues, out of University of Utah, out of Rice University, James Tour, who have invented ways that we can accelerate this, right? There's mine sites that are being financed right at the moment through the US government. There's one for Hyperion X for heavy rare earths in Tennessee. It's got they've had $115 million worth of funding to accelerate the heavy earth metal hub. There is stuff happening. We could do a whole podcast on what's happening. It's not as if nobody's moving. They're moving, but they're moving way too slow, in my opinion. They've got to do more and more and more of the same. And we've got to. There is a future, but we've got to go and grab it. It's like our forefathers. We got here through enormous evolutionary selection. We've got it. We're all worried about our feelings and our sensitivities and how we think about ourselves. We need to go back and get on to our more resilient DNA that fought wars and did that. We need to become, I guess, real and really start to examining our belief systems. My father used to say to me, "Don't necessarily believe something just because you think it." It's a good axiom.
Yeah.
that we're all believing things, because and when they're properly examined, they're not really solid beliefs. Like, if you look back on what you've believed over the last 5 years, or however many listeners are listening to this, we're all guilty of believing things that are frankly absurd. And so we've got to start, wiping that fog away and start believing in things that are real and thoughtful and intelligent. And I know that's kind of they're throwaway lines, but I think, part of the whole, what we've talked about so far demonstrates what we haven't thought about. There's a million other things, but I've got a lot more coming through.
Great.
When whoever reads this, send it to other people. Make sure they read it. We have to wake everyone up first. This is all about diagnosis and waking people up at the moment.
Yeah, I don't think those are throwaway lines, Craig. Not now. I mean, maybe not too long ago they could have been, but I do think more people are waking up to, the idea of, when you talk about policies of actually running an effective structural, country or society, what it takes. And it seems like a lot of everything else that we get inundated with in the news is, as tragic or saddening as it possibly could be, it is noise. A lot of it is
total noise. It's just total noise. And your generation have got to fix this mess that we made, right? And
I'm glad that you taking accountability.
Well, like absolute accountability, right? Absolute accountability. We are, I don't know if you read it much, generational theory, but my generation, we're the greed is good generation. We're idiots, okay? And I don't mean that in a nasty way against my own generation. It's just, it's a natural generational thing. We had it easy. I could buy a house at 3 times my income. You have to pay 10 times or whatever it is. There's a whole bunch of stuff that we made more difficult for people because we got carried away with our own ideas. In Buddhism, there's this concept of conceptual attachment causing suffering. That is that our ideas become so prevalent in our mind that they cause us suffering because we don't properly examine them. So what I'd say is that you guys aren't going to have a choice about being resentful or anything like that, or being angry. You guys have to actually sit down and start working really hard to figure this out, because it's going to have, you've grown up enjoying the fruits of our silliness, and you're going to get the consequences, and that's very unfortunate. But it's the truth. It's the truth. The greed is good generation, because of the evolutionary sink, the cycle, made a lot of mistakes, and we've got to be accountable for them too.
Incredible writing, masterclass at work. There's more coming down the pipeline. It sounds
There's more coming.
Yeah. All right. So you can follow Craig's work on his X feed at C Tyndale, CTINDALE, and you also have a Substack. Have you been publishing on Substack as well?
I've got Substack, or you can find me on LinkedIn. Everybody, some people prefer LinkedIn, some people prefer Substack. It's just my name on LinkedIn. It's just my name on Substack. And get it out there. We're going to shake this world up. I'm not looking for subscriptions and all this other rubbish that people are looking for. I'm looking to wake everybody up. That's my cause. That's my legacy, I hope.
Yeah, you're doing a great job of it in the last 30 days here, Craig. Hopefully we can have you back here in the coming months and see how things come. I appreciate your time. I know you've been super busy and inundated with a lot of requests for interviews, so I appreciate you sharing some of your time with us.
It's been an absolute pleasure. Thanks for inviting me.